Maximus Analysis here for September 15th, excuse me, September 19th, 2016. And this is what I posted out on the newsletter. Again, if you're not a subscriber, please let me know. Just kind of giving the harmonics of what has happened in the past. These actually probably look like similar moves. This one's a little shorter, but again, the time harmonic and it's still giving a pullback. So we'll continue to watch and see what is going on. But again, they keep flirting around this 2134 level. To me, the breakdown starts around let me see if they get a close under the 2116 level for the ES, and then we'll start to see what happened. But remember, higher time frames kind of give you more perspective versus if I broke this down to a 60-minute. Matter of fact, I would only break it down to a 240. Again, you could kind of see where we're in space right here. So we still have, if you use a Fibonacci retracement, you know, I think they tested right to the 50% mark and they rolled. So they need to hold, you know, this trend line. Again, this trend line right here, which is right there. I mean, I don't even have to write it. I'm a person that, you know, I want to look at the price action. So again, people might connect the bottoms. No, don't connect the tips. I don't care about that. I want to see what the price action is. So we had the flush down, huge move back last Tuesday, and they've just been chopping it sideways and sideways. So how many bars did it fall down with is actually what we should look at and say, okay, we went down with 13 bars, but currently we are 36 bars in, so we're almost triple the amount of bars in, and we haven't broken 50% of that. So again, that still puts me in a weaker position, especially with this close on the 240 minutes. So you can see that you have this, I wouldn't call it a perfect evening star, but you know, again, it's candlesticks, so it is what it is. But you can see small candles, big candle volume. So again, I'm looking to see if they break below this 2122 area, but especially the 2116 area. You saw that was defended a lot last week. So let's look again, get back to our typical time frame. Let's go to the NQ. You see it was down a little bit. We're into some resistance levels, so you kind of got some bipolar candles going on. So we'll see where they close it, because again, you know, it's choppy. One bar back. In the past has not been the sexiest up here. So thing that was different here is actually at 3 bars back versus just 1 bar back per se. So we'll continue to watch that. You can see that the YM testing that mid-level 17,900 level again and again and again. So I don't know if we've gotten a false breakout reversal, but again, everybody wants to call this as the final top. I will wait, see what the rip looks like when I want to get it, because these things don't go straight up or straight down, and I'll have plenty of opportunity again to see where it's going. You had crude. Crude is continuing to look weak right now. Again, I would look for a buy signal. When I say buy signal, new subscribers, I mean a break of a previous high. And when it starts to look at the weekly time frame, I usually wait to see what happens Thursday and Friday, because I don't want to get sucked into the price action. So again, example, if somebody took the immediate break here, the break of this high, right? This one right here. Let me give a cleaner. Somebody gave a break here and they didn't wait, they would have gotten stopped out. Versus Thursday, Friday, you'd say, okay, especially with crude, because crude, let me show you crude. This is a crude 60-minute. Yeah, crude does this all day. Look, boom. Think you're good, kill your ass dead. Think you sideways, boom, another dime. You know, up, down, up. The crude intraday, either you love it or you hate it. Again, I've traded it. I do like it actually, but it'll set your hair on fire. That's the thing that you need to understand. So that's why, especially with crude, I'm willing to just wait it out a little bit on the longer time frames, because it will move $1.50 both directions very, very quickly. So we'll continue to do that. But again, I wanted to add in, just looking at these high level markets, again, look at the stuff that I put on the newsletter about Europe. It's still taking place. So I have two charts that I want to look at, and I'm going to use the daily for this. because I think they were on smaller time frames, more swing trading. But one was CIM, which actually ended up being a really beautiful trade setting up here. So the one thing I do want to tell you that sometimes they break one low, but they don't break two. And I just used this because this was the last time we had some really huge volume. So again, remember to kind of look at your pivots or when you get some high volume to see if those are going to be capitulation points. Now the thing is, you don't blindly just say, oh, there's high volume, that means that I'm going to be selling. You got to look where it is, because if it's coming down, let's say it's high volume here, okay, the bulls came back in a hammer formation, and look at the intraday action of that day to understand why a hammer might be more significant. But if it's not orphaned, so I mean what it is that if it actually layers close or above a high, previous high, that's why I want people to start looking at more of their charts. Then you could say, okay, I got to risk a free, not a risk-free position, but I kind of see that the trend is broken above this high, retraced back, 3 bars off, and then continues up. So this one chopped sideways for a while, so let's see what the follow-through will be today. But you did have that high volume that you see on the down push, but then the other one, I don't know if this capitulation, because if you look at the price action, it might have been capitulation because it closed low, but then it gapped up. So that might have been exhaustion with this bar. So you're looking good. I say if you get above 1673, you have a very, very good chance of getting to that $17 mark, and that would be my target to either take the position off or go into a pure risk-free type of trade. The next one is, it is Chesapeake, and Chesapeake is definitely an oil name, and you can see that on the weekly chart it looks like it needs to be a retracement. Now I want to make sure that I show you that the time frames will let you see or give you some insight into how things are looking. So right here I say, okay, you came down, broke below this low, came back and recaptured these lows, and these lows I think go back a while. Let me see if I can find it. Yeah, these lows go back all the way to 2002. Okay, you see the breakout above that level, came back lower, and they've been above these levels for a while. So once I saw that, I'm like, okay, if they get below it and recapture, it could be a false break reversal that would actually give you some sort of bottom to trade. But you can see that it's lockstep with crude's action, so you got to be a little cautious. And I would just wait for the pullback. I think it's the same, almost a similar trade to what we have going on with the crude trade. So I wouldn't let this action freak you out. I would just look to see how it gets around the $6 and $5.50 range and see what the volume is starting to look like. Again, this is the weekly time frame, so just keep that in mind. But just be patient and wait for Thursday, Friday, see where we go in regards to crude, and it should line up with this one. Next one that I want you guys to look at, and you can see how scary it looks on the daily versus the weekly, and that's why I really stay with that time frame a lot. You got CIH. Again, this was another one. What is it? Is it CIH? CIM, excuse me. CIM, again, giving a great movement. You see the volume, so that's why I put this little area based on this candlestick, right? And then, stepping through it and saying, okay, it came and tested the high of this high volume with volume that was not as high. So, I mean, that's a Wyckoff theory, and again, you could really dig into volume analysis, stuff like that, but let's just keep it simple, keep the charts as naked as possible. What I'm seeing is that if it can get above this 1673 area, it goes to $17 and possibly like 17, let's say 15, 17.25. Remember, there will be a lot of breakout traders come in, so I like to take the position off or go down to runner's type position. Runner type position means if I had 10 contracts, 20 contracts, I go down to 3 or 2. I'm pulling off profit into strength versus waiting like everybody else for this candle, and then they could just whip it down 25 cents to get those stops and then continue higher. So just take that into account. And but this one looks good so far, and that's the daily. Let's look at the weekly. And kind of giving a pretty good setup right now. Again, I would probably prefer it coming down to this $15 range, but let's see where it goes. Again, let's use our Fibonacci retracements. to start things, and you can see the retracement is not that deep. It's not even 25% yet. But depending on the time frame, I think this person was actually a swing trader. So that he was holding for 3 to 5 days. So again, that's why I actually did use the weekly time frame. So excuse me, the daily time frame for this chart analysis. So again, you can see, kind of where it bounced on the weekly chart and kind of held this area. So again, holding this area, it looks good as long as there's no funny business on gap up, gap down. But if you could definitely get that follow through in the clear above here, I think you definitely will come out. And again, volume will step in, and this will get on a lot of other people's radar, which means that you can sell to them. How about that? So again, let's look and see what happens. Again, try to stay away from the noise. You're going to have a lot of volatility step in, and that means that it's a gift and a curse. So again, just be careful when they're moving things around, sloshing things, looking at obvious stops, and we'll take it from there.